Everyone, welcome back. This week's update is packed because we're at a serious inflection point. From the Fed's latest moves to Bitcoin flirting with major resistance, global liquidity expanding, and the SEC softening its stance on crypto, it's all coming together. We'll break it all down: price action, macro data, market sentiment, and what to watch going forward. If you're not already in the Discord, the link's in the bio. Join that for daily breakdowns. Let's jump in. Bitcoin is currently sitting at 87.5 thousand, and it's still within this downtrend that we've had since hitting 110,000 as our all-time high. Although we have broken these short-term downtrends and we are kind of in an uptrend right now, there is still potential for Bitcoin to drop further. So let's explore that. Looking at our EMAs in Ichimoku Cloud, the good news is that Bitcoin is above the 200-day EMA and the baseline of the Ichimoku Cloud. This means for at least the next couple of days, we might see Bitcoin push towards 90K or above. However, there is still resistance that Bitcoin needs to climb over in order to actually be bullish again. Firstly, we need to break through this 100 EMA. This is a key resistance slash support for Bitcoin. As soon as we're below the 100 EMA on the daily time frame, Bitcoin starts moving bearish and we get into this kind of short-term bear market where we see these massive drops, massive liquidation events happen. So if we do end up denying here, which would be about 90 to 91,000, I do think we will see Bitcoin maybe even hunt for lower lows, but at least retest this 78,000 level. So we do need to push above this level. If we start pushing above this, there's yet another level for Bitcoin to climb over, and that's 93K. If we push past this and push above the daily Ichimoku cloud, this is where we will officially be bullish again. So this is where the bulls need to take Bitcoin. Looking at the stochastic and the RSI, it is clear that Bitcoin has started to get overbought and there is a clear bearish divergence happening on the daily time frame. The last time we were at this level, we were actually above 100,000, but right now we are sitting below 90,000. So that's a clear bearish divergence to keep in mind. However, we can see, zooming in on the RSI, that we kind of have this break of this kind of downtrend that it's been in. However, in accordance to previous theories that we've held, and those of you that consistently watch me know that this is kind of how we predicted when Bitcoin would make that all-time high last time. If Bitcoin pushes up in its RSI but denies 66, this is a major area for it to deny, on the RSI at least, because that's how we know whether or not Bitcoin can actually attempt an all-time high. If you look back historically, when Bitcoin last time attempted to push past that 74K all-time high, it kept on denying on the 66 RSI and ended up going back down to the 60,000s. So if we see a similar type of story play out here, that is what I'm really just going to be watching out for. However, if we get kind of a breakthrough above this and an extension of the RSI or the stochastic, sorry, then I do expect Bitcoin to at least attempt 100,000 and if not, go higher. Looking at the weekly chart of Bitcoin, this huge red candle that we had that ended up pushing us to 79,000, this really scared a lot of investors. However, we ended up holding the bottom of the Keltner, which, if you were in my Discord, I did mention that Bitcoin was likely going to close above this area. Because historically, as long as we stay within the Keltner channels, we are in a bull run. But once we fall out of them, like once we break down below this purple line, that is when we enter the bear market. Conversely, if Bitcoin wants to make an all-time high, it needs to push above the top of the Keltner, which is this kind of pink line. And this is right now at about 97.9, or let's just say 98K. So Bitcoin gets, really bear market bearish once it falls below this purple line, and all-time high bullish once it pushes above this pink line. So I didn't expect the bull market to be over. That's why I knew that even though Bitcoin started kind of pushing out of it, as long as we close above this level, we were good to keep pushing higher. Now, like I said earlier, we are at a key point. If we push above this violet line, I'm going to call this violet, it's not really violet, maybe a little lighter shade purple, whatever it is. As long as we push above this, we are good to retest this pink line. Because historically, you push above the Keltner, you go touch the top, you hold the bottom, you likely, again, touch the top. So if we were to do a kind of deny here and do a double bottom push higher, that would obviously be a little bit more bullish. However, if we do this slow chop up and go and retest this area right here, this 98,000 area, maybe retest 100,000, leave a wick up there, that is still possible. So there's nothing to fear about as long as we are inside this channel, and there's no reason to think that we'll have an all-time high as long as we are within this channel. We have to either push above it or push below it, and those scenarios, are each respective to whatever happens. Let's talk macro. The March FOMC meeting gave us some important signals. The Fed paused rates again at 4.25% to 4.5%. There's no surprise there. But they announced a slower pace of balance sheet runoff starting in April, down from 25 billion a month to 5 billion a month for treasuries. That's a subtle shift towards easing. Now, what about the projections? GDP was revised down to 1.7% for 2025. Unemployment up to 4.4%. Core PCE inflation is still sticky at 2.8%. Finally, the Fed funds rate projection still at 3.9% for 2025, meaning fewer cuts than the market expected. So what does this mean? The Fed is talking tough on inflation, but their actions show they're preparing to pivot. The GDP downgrade plus rising unemployment signals slowing growth, but inflation remains sticky, so they're walking on a tightrope. Complicating matters further are the renewed tariffs announced by President Trump, which Chair Jerome Powell explicitly acknowledged as a downside risk to the economy during his press conference. Powell emphasized that these tariffs could pressure both supply chains and consumer prices, and while the Fed has not priced them fully into their outlook yet, they're aware of the potential inflationary shock. This adds up to uncertainty, not just about inflation and growth, but also about trade policy. And it's this combined macro tension that keeps markets choppy and cautious. As we've talked about previously, Bitcoin follows global liquidity with about a 2.5 month lag. Looking at this liquidity chart, global liquidity has been rising steadily since early January. This includes central bank balance sheets, sovereign liquidity injections, and international monetary flows, all of which have expanded as policymakers across regions respond to slower growth and persistent inflation. While the Fed hasn't cut rates yet, the slower balance sheet runoff is easing financial conditions. Combined with liquidity injections from Europe and Asia, the broader backdrop remains favorable. Like I've said, Bitcoin has historically lagged global liquidity by roughly 2 to 3 months in previous cycles, depending on local market dynamics and external macro shocks. If this trend holds, this puts us on track for a mid April to early May upside move. Now, if you go back in time and watch some of my videos, I said that I'm expecting a rally at the end of Q1, beginning of Q2. This is when I expect us to start pushing upwards. And obviously, this takes more than just 1 or 2 days. This is a product of, weeks and months. That is when we see the markets catch up to such macro indicators. And right now, the macro is saying conditions are improving, but the market hasn't caught up yet. This brings us to crypto specific news. Looking at the CMC Crypto Fear and Greed Index, we are at 33 today, up from 31 last week, up from 20 last month. This shows that sentiment is recovering slowly but surely, and historically, these resets is where most of the accumulation happens. The SEC is negotiating a settlement with Ripple that could result in a $50 million fine, down from the original $125 million penalty. Additionally, Ripple is set to receive $75 million back from the SEC as part of the court-ordered reimbursement. The SEC has also dropped its cross appeal, signaling a significant de-escalation in one of the most high-profile crypto enforcement actions to date. If finalized, this would effectively close the long-standing case, potentially opening the door for greater regulatory clarity going forward. The US SEC hosted a crypto task force roundtable, and the key takeaway, the agency just acknowledged the need to modernize crypto regulation, but stopped short of providing any concrete policy proposals or timelines. While it sounds promising on paper, so far it appears more like semantics than substance. Meanwhile, Trump's administration is hinting at a regulatory overhaul that could be pro crypto, but again, no binding frameworks or actionable reforms have been introduced. What the industry needs right now is clear, enforceable, and fair regulatory policy, not more vague rhetoric. While the recent developments in the Ripple case and the SEC roundtable suggest a shift in tone, they remain largely symbolic. Returning 75 million to Ripple and dropping a cross appeal signals de-escalation, but without actual legislative change or binding guidelines, it's not enough to move the needle for long-term adoption. So yes, like I said last week, sentiment is rising. The SEC is softening, and the government is hinting at a more crypto-friendly outlook. And I'm sure you're tired of hearing that. And I'm sure you're wondering why, with all of this good news coming out, why hasn't the price gone up? Why has it actually gone down? That's because we need to see real policy reforms. Right now, these are just signals, they're not solutions. The momentum is building, but it needs substance to turn into sustainable growth, or it will just fizzle out. So, where does that leave us? Bitcoin is coiling beneath resistance, sitting at the edge of several technical and macro breakouts. It needs to flip 91K and break above the downtrend and Ichimoku cloud to change short term structure. Global liquidity is trending higher, but Bitcoin has yet to reflect that shift. That lag continues, but the window is narrowing. A Fed pivot, even a soft one like a full stop to balance sheet runoff, could be a key catalyst for this. Sentiment looks like it's bottomed and is recovering, but it's still fragile. Rejection from 91,000 could reintroduce that fear. And while we are seeing cases like the Ripple case winding down and the SEC retreating, it's not enough. The market needs actual policy reform and not just softened enforcement. This is a market filled with uncertainty, but beneath it, momentum is gathering. The pressure is building, and the foundation for a breakout is quietly being laid.